Everyone, welcome to a new week, and the main news is really the tax in the Gulf. So we've got surging oil prices this morning. This is the DAX um, from Friday. Here we see we declined into the lower the day, and we've been down all morning. We're at 23,666. We'll have a look at that at the moment. We are short this one on our 5 minute move crossing. Sorry. This is very much trending, as we saw there on the hourly chart. So we've been taking this as a trending trade, but here on the mean reverting strategy, that would have triggered another short there at 7 o'clock. And 50% of the trade will be off because we've hit the outside of the Bollinger Band, you can see there, and the rest of it is still on stop loss just under the 20 period moving average here. But the main move has been a trending market. So if we look at our let's just use our crossing EMA strategy. That last went short here at 6:55, 5 minutes earlier, having sort of tried to move higher here on the 5 minute time frame, but that was very much against the trend, as we've just seen on the other chart, on the hourly chart. So big move down here. The hourly chart was breached significantly here back on Friday. Friday morning, as we trended lower on the stock markets, closing into closes on Friday. The S&P 500 on Friday was down a massive 1.25%, 92,740 we closed, and we're down again this morning. The derivative here is at 7,316. So stock markets spooked, and we are moving low. The Nasdaq 28,930 on the 100. The wider Nasdaq was down on Friday some 1.5%, 400 points, and the Dow lost a full fat 1% and was down 537 points. So big moves low. The FTSE was down 1.71 on Friday, and we're down again this morning, trending. Don't try and catch the bottom of this, traders, if you're trading this to the downside. And the DAX was off a full fat 2%. We've just seen on the DAX. We'll come back to the DAX in a minute as we move into the open. We are 20 minutes away from the open. The main spooking has been the attack. I don't know if I'll show you the headline, but there's been an attack in the Gulf, and it's moved oil prices down. But the other main drive we saw on Friday as well, and on Thursday, was this move in the bond markets. The US bond closed at 459 on Friday, and it's up again this morning, touching the 460 area, the key 10-year bond. Let me just see what I can't show you a bond chart here, but I think we're pushing higher this morning. Indeed, we are. Yeah, so that's up, and obviously the attack in the Gulf has prompted move in the oil prices. So Brent at 113 and WTI at 17 to the upside. If we just move it, put on me, not that one. Our yes, it is that one. Sorry, that's the. If we look at the move today in the oil market, it's been a rally here for the Brent market, already well over $100 down here. This purple line down here, and there's 120. So we're over the midline, 110. We're at 113 and moving higher this morning. Maybe some stalling at some point, but so far this morning that derivative there went to 113.70, and that was at 2 o'clock, interestingly. So it's sort of cooled a wee bit since then. London commodity markets will be open. They're opening. So you can see the volume is dropping here in the last hour, but we are moving higher, very much above the 20-hour moving average, and that's given a rise to the bond market, which has hit equity, which has hit 4x. The dollar was stronger earlier, and it's weakened in the last few hours of the Asian session. We look at the euro, 116.35. So we were down here. Let's take the volume off. Getting in my way, to be honest. We went down to 116 zone. There's the 116 purple line here. We were within that zone, 10 pips, just shy of 10 pips for that. And then we've moved up here in the last couple of hours, and we're actually moving relatively strong. There's not a lot to move markets this morning. It's not a really busy week. The Fed minutes, which are a bit sort of not redundant, but backward looking. Obviously, the expectations I said on Friday and in the newsletter, I said on the video, which I recorded on Thursday night, was expectations of a rate hike, not a cut, not staying equilibrium unchanged. So a rate hike by the end of the year. Markets, the CME now are pricing in, or were pricing in on Thursday, 38% chance of a rate hike, at least 25 basis points, possibly 0.75 by the end of Friday that went to. So from 38% on Thursday, it went to close of 50%. So it's 50-50 whether we're going to get a rate hike on by the Fed by the end of the year, by the December meeting. I'll just bring up the free data. You can see that on there, which is the CME Fed Watch tool. And if we look at the obviously nothing happening in the immediate solutions, first day of Kevin Walsh being the boss today. You can see the next meeting in June, nothing happening. July, equally nothing happening, 92%. September dips a bit. This is the chance of this is no change, 78%, but a 20% chance, 21% chance of an actual rate hike by September. So that's jumped up significantly. If we look at that from where it was, this is on Friday. So where it was, here, where it was just a week ago, it was about a 4% chance of a rate cut. Now we have a 4% chance. See what's happened there? It's gone down to 0.7 to 1% chance of a rate hike. Was only less than 5%, and now it's 20%. Massive switch in that really hot both CPI and PPI. Remember, PPI hit 6% on Wednesday. That's a 4-year high, and CPI, the headline and the core, are both hotter at 3.8%. Exactly the opposite of what the administration in the US are wanting. So not only was the visit to China, the summit with all his coterie of excuse my language, big swinging dicks as far as the business world is concerned, there was very little deals come out. Then the main deal that was signed or was agreed, the Boeing deal for 200 aircraft, was very disappointing. It was expected up to 500. That might be obviously speculation, but 200 is a big number, less than 500, isn't it? And Boeing stock fell significantly on Thursday when that became known, and then fell again obviously on Friday as the general market fell. So markets are really focusing on the Fed. As I said, the minutes on Wednesday are rather backward looking. See if there is any. The only interest I'll see in that would be the talk of potential. How many are talking about keeping things stable, and how many, if there's any chatter from anyone about rate hikes. Remember, we had those three dissidents, if you like, who didn't want the bias to the downside still in the statement. So that'll be interesting to see how that chat actually went. Sorry, one of my screens is sort of tilted over. How that actual chat went. And remember, the minutes of the official report, they're there for posterity, and they are quite significant. So we'll be live on that with you on Wednesday. Earlier in the day, we got, as you can see there, we got UK inflation, we got Canadian inflation tomorrow. We'll be live for that, and we got some jobs data out of the UK, which came out. That's on Tuesday. Today said nothing here, either a medium, or high impact event. If we widen the filter to the minor events, there's nothing still really moving events today from a data point of view. Chinese data this morning, however, did disappoint. That hasn't added to the mood in Asia, we've had Asian stocks sliding, bonds higher there as well. The momentum's still going there. So this is quite a disappointing set of numbers from China this morning, but not, I could say, not a great deal of other market moving data today. Some GDP numbers out of Japan overnight tonight. But first red high impact event there you can see is the jobs numbers from the United Kingdom on Tuesday morning, and the political turmoil continues here in the UK. Keir Starmer, Prime Minister, under lots of pressure. It looks like Andy Burnham is trying to stand, or will stand for the vacant, or was going to become a vacant seat to get back into Parliament. There's a tough call whether he's going to win that, as well. It's perhaps not as easy as many would have thought. Certainly 2 years ago, it's a nailed on Labour seat. The Reform Party, Reform UK Limited, as they are, will be looking to try and take that seat. But anyway, politics still swirling here in the UK. And if we just go back to sterling, also weaker, the stronger dollar on Friday and this morning, and also turning around and into, but under the key 135, 134, and into 133 this morning. I haven't marked that on there, but you can see there 133 was tested by on the cable rate this morning, but we've turned around quite significantly this current hour, and that's high. So let's just go back to our indices trading, and we like the DAX here on a Monday morning, kick off the business week for me. I know a lot of you are already been up and running in Asia, but the trend is down. We've sort of flattened out in the last few hours though, but we're down again this hour, so we may see some turnaround, and the worst over. So where are we? So 23,700 really is our we've been under that 682, so 23,700 is a fat round number this morning. Our pre-market low as we go into the open was down all the way down there at 23,685, so 23,700 is the round number the DAX is playing with, and the trend, as you can see here, is very much the downside on the 1 hour chart. We go up the time frames, 15-minute, still down. Quick brief bounce over the 20 over the 20 period moving average here on the 15-minute, but we're still down again, and market lows just got even lower. There we are. On the 15-minute time frame, 23,635 in the last 5 minutes or so. And we're going down to our trading platform, trading time frame. There's our low, 23,635. The low into the pre-market. Our pre-market high, which is just underway. So I'll move that down a bit, and there we are. Our pre-market high this morning was the opening time frame. So if we put that up here, so this was Friday. Close was here, wasn't it? Yeah, so we've been, that's our high more or less around about there. So for today, so let's go back to our 5-minute time frame and reassess it. There we are. So that's our high, that's our low. We're about less than halfway between. We're still under the 200, the 100, and the 20 minute move, or 20 minute moving average. The moving average. So we're aligned nicely to the downside. So this is still trending. Looking for perhaps a tick up there. The system would have taken that very with very small risk, given that they're very much against the trend. So that's our low. It's ticked up. It's taken at least 50% off from that. In fact, it didn't. No, in fact, it would have got in there. So it's an even smaller low than I thought it was. So that's just ticked long, that mean reverting one, and it's well, I don't know whether it was close 50%, but because we're quite close, but I taken 30% off target, would have been right about that 100-minute moving average there at 23,745, and then obviously the second target's top of the Bollinger Band, but very small risk in that we're against the trend at the moment, but we'll see if that continues as we move into open. We're only 8 minutes from open, so we have popped up. So that was the short there to the downside. There's 50% taken off there. It's another leg, and then what would have happened there? I'd have been stopped out. Actually, I would have stopped out here as it's crossed, so I'd have been closed the other half here. So we'd have got 50% here, the other 50% here. As it's no, actually, it's not happened till there. So that would have closed out. So we'd have got in there, out here, then out here on the second half, and then it's triggered long there. So that's, let's just do this properly. How the system trades. That's gone long there, but the other strategies, this trending strategy will remain short. I'm pretty sure on that. So let's have a look at the MACD. It tends to be a bit more sensitive. So interesting. So this has reversed as well. So this short here. We've had a reverse on the. So what was there? That's a very minor winner. So that's reversed out. That is still not either long or short. It's just not short anymore at the MACD. And our mean reverting, our trending, which we started off with, is still short. Basically, the it's the hourly chart. Again, that one also would have closed out here, so it would have got short here. Would have actually that would have gone short there. Stop loss would have been up there, and it's gone again. She's probably closed some of that out as it's reversed quite aggressively. Then it's gone down again, down, and then again it pulled the stop loss down, but it's stopped out around about here. So that again is the short is closed here on the 5 minutes. So the shorts on the trending strategies are all closed. We haven't yet gone long on the trending strategy, and the mean reverting has already Bollinger Band and Stochastics has gone long, but quite tentatively, as I said, given that the trend remains to the downside. So we are long here. We haven't actually taken this, have we? So from here, let's just take this as a demonstration tool. So we're just putting a 0.0. Don't normally recommend this getting in late, but let's just take this because we're doing this live, aren't we? So we're going long here. Stop loss down at 23,635. Oops. I haven't marked that. Sorry. Let's just have to edit that. So I want to edit that. What do you say it was? Bottom of the market, bottom of the turn. Actually, no, it's 23,665. Let's make it round about the moving over 23,665. We're confirming it. And our target, our initial target would be here, 23,753. But we won't put that on because we've only got a very small lot size. But we'll see how that transmits. Obviously, we've got the impact, the volatility of the open. Could really use to reverse this. The trend is down. Again, to add any volume to this long position, we wanted to break this 100 period here. We've got over the first, getting over the first resistance to 20 period, but we've done that a few times here, haven't we, since 5 o'clock, and it hasn't gone anywhere. It looked like we were moving up, then we moved down, so that's been a leg up, then a leg down. But if we just put the where's the I haven't got the high on here. Did I get rid of it? Okay, high. That's my high. So if that's our a range for the day, if we just put a little fib level on there. So if we go from which is a bit higher than that, wasn't it? Oh, I didn't mean to do that. Let's delete that start of it. Right. So sorry if I just moved that line. It was a bit high, wasn't it? Just for the sake of completeness. Monday, Sunday. Where do we open Sunday? So that's our actual high for the day. So let's just do a little fib of the range we've been in here pre-market or pre-Europe, pre the actual cash open. So see our fib level. There we are. So we're right in the 38.2 level at the moment, which is where the 20 sits. So the 100, we take some off there, and the 50 is there at 23,765, and the 61.8. Oh, you can see all that. The 61 point, the key fib reversal of the downtrend here. The key say this downtrend may be over. We need to break this Fibonacci level, which is the top of, also coincide with the top of the Bollinger Band. So that's a key level, 23,800 or 23,800 is the key level as we go into the, if this is downtrend is going to reverse at least on this 5 minute down frame. If this doesn't, if we don't break this 38 or the 100 or the 50, you know, there's lots of resistance to the upside. This downtrend continues, but we're in the money so far, in a little bit on a very small risk, moving higher here on the 5 minute time frame following this cross here. We got in, that would have been the clean, because you can see here this, if we on that cross wouldn't have confirmed properly there, but we had been overbought, so the entry would have been there. If the automated system was trading, we were watching this manually, and we didn't get until here where we are now. So see what happens as we get to that 100 period to the upside. So as I said, the main driver has been the oil markets and the bond markets moving high. Let's have a look what's going on here in London. Just take them off, show them all. 10,140. That's also reversed. That would have been a similar move there from 740 as we go into the open. But here we had a bit more distance to travel to the 20 period moving average, and that would have taken some profit off there now, and the rest of it left on with a target obviously ultimately up here. Which also sits, is interesting, different setup here, technical setup here on the FTSE, the 200 settling at the top of the Bollinger Band, so the hundreds halfway to there if we can hold this. But obviously the opening trades are going through now, so let's just put the volumes back on. And FTSE not ticking up particularly. We had a tick up here on this buy as we went down here, the pre-market low at 10,010, and the DAX also. So there we go. We were taking some profit off there. Up we go. Are we going to breach this key 61 fib level, and are we taking profit there? It looks like profit's being taken there as we get to that level. So as we go into the open, so I'm going to close mine as well because that's a key resistance level. So we've there we are. If we just look at our trades, you can see we've taken 50 points out there. So we hang on a minute. So we got in at 732, and we got out at 23,776. We got out. We got in at 23,732. So that's what's that? That's 42 points. We got 51. That doesn't make sense, does it? 51 pips on that. Oh, there we are. It was 12 to 78. So to the upside on the DAX this morning. I'm happy to get out because that's a key resistance over the 60 fib. We'll see what happens going forward. So that's fully closed now. Given that we got in late, didn't want to leave anything on the table. So there we are. We're closed and out. But we are moving higher now. So it might have been, prudent to keep a bit of that open, but we only had very little risk. So that's, that's what we're doing, aren't we? We were testing. That's the first move higher we've had against the trend. So that's why we had a bit of consolidation here, which might have prompted us to see, well, that was the low. So the pre-market low looks like might be the low of the day at the moment, but who knows? We've had a big move down in the markets in Asia. If you look at the Nikkei and the Aussie, again, we just got the hourly time frame down on Friday. New lows again this morning here on the Nikkei, and 60,500 was breached on the Nikkei. The ASX over in Australia, 8,500 has been breached as well to the downside. So again, down on Friday, down again significantly here. See, as the opening trades came in, and 8,500 has been breached on the Aussie and trending low, like all global markets. Futures over on the US may have ticked up a bit. There we are. We are up in the last couple of hours. Nasdaq is actually open. Yeah, that's open. So it's been into its 200-hour moving average this morning. Looked quite weak earlier on, and we're into this 28,800. So we're under the 29,000 level here on the Nasdaq. The Dow 49,230, also down into the 49,000, a big fat round number this morning in early Asian trades, and it's ticked up in the last couple of hours. But we are certainly weaker into European open. So let's just have a look at the back to the DAX. So picking up that trend, that reversal trend is in play. We're over the 61.8 quite significantly. So, high anti is a wonderful thing, isn't it? But there we go. There's our first initial target. We got out here, didn't we? At the top of this 61. It's the 61 fib. This green line here. There we are. We got out here, and we've continued to move higher. And certainly the rest of it would have been closed there at the 200 period here on the 5 minute, and wait to see what happens to the upside. So the mean reverting was first in to go long. Our trending strategy was probably also turned around. Now let's go through them. Crossing EMA would have crossed. There we are, but that would have triggered there at 10-2 before we got back above the 20 period. So that's gone long there, and again that's taken out that high. So that's just to, that would have kept you moving higher. This one, this is still very much open. Stop loss would have been down here to start off with the turn in the market, the low of the day, and rapidly pulled up to entry. In fact, that would have got in there, wouldn't it? So that is still open and running. That's the beauty of the trending market position. Certainly, we do. I would have, as you just saw me do it on the. If I was trading this manually live, and that, again, sometimes it's the beauty of letting the system trade, automate it. The emotions don't go in. You're not watching it. It's just the rules have been triggered. The entry was here. Stop loss was here. Let's just put these lines on for you now. So the entry would have been there because the 5 and the 9 have crossed. We've crossed above the 21 EMA as well. So this is the 5, the 9, and the 21 EMA. We're looking for cross of all three of them. We had a first trigger here, the cross at 750 of the 5 and the 9, and also at the same 5 minute candle. It doesn't always happen at the same time. We moved above the 21 EMA. So that would have triggered a long. Automatically, the stop goes at the low of the turn of the market. So the stop loss is there. So let's put that on as a red line. Green for go. Purple line there. And then as we moved up quite significantly, because it's the open, I would have rammed up the stop loss on the completion of this candle here on open. The stop loss is now here, and we've moved up now. We're in the money. The stop loss is at the midpoint of the Bollinger Band. That's what midpoint of the Bollinger Band. The mid moving average we're using. So my stop loss is here on this trending strategy. We've got in, as I said, 23,723. My stop loss now is here at 23,750 or whatever. Is that 760? Yes, 760. And I'm waiting for a reverse before we close that out. The other way of trading with to create a target is you can use the ATR. So the ATR was 30 points here on this 5 minute. See what's happened now? We've gone long. Here as the triggers cross, the ATR is 30 points, so twice at least. I'm looking for 2 to 1, so twice times 30 is 60, so 60 points from 23,723 is obviously 780, and we've more than got that roundabout here. So you're taking some first profit off there at 780. But remember, this is a trend following strategy. So you want to stay in it as long as you can. So, because this has moved quite significantly. I mean, it looks massive and significant move here on the 5 minute, and it is. There's lots of points here. So if this completes green again, I'm going to pull this up even more aggressively, or would pull it up more aggressively to this top we'd seen here earlier. So, in fact, I don't do that now. I'm going to do that now before that candle completes. But if this is another, we've had 1, 2, 3, 4, 5, 6, 7. So 7.5, that's 35 minutes of gains here on this derivative mark. We've had 7 consecutive green candles. We need a bit of a pullback as open comes in, but perhaps it was the look we're moving lower. Would have pulled more shorts in, and obviously the higher time frame shorts will still be short, but our 5 minute time frame has taken as long. Sorry, I've ignored the comments. If there's anybody here, there isn't anybody here. So I've got away with that. Oh my word, I've got my great big head up here, so you've been able to see what I'm talking about. Anyway, this is the DAX. Sorry. And it's still trekking higher here on the mean reverting, on the trending strategy. As we the trade we took manually was the mean reverting strategy on our Bollinger Band stochastic setup, because this will now be looking potentially to go short. There we are, because we burst the outside of that Bollinger Band. Remember what this strategy is? It's looking for a mean reversion, but we need for the stochastics to cross. So we ideally in the overbought area. We haven't quite got that like we had here on the downtrend. So we went down all the way there and then it crossed back out to go long again. But remember, we used the fib on the range of the day to get our target levels, our resistance areas. And, I've been a bit more patient. We'd smashed right through that on the open. I didn't want to take any risks. So we took some profit on that was there. But the trending strategy would still be in. This strategy, I say, would have certainly taken some profit there, as we said. The 50, 20, 100 period in the first fib at 50, but we didn't get in till late, so we let that run, took it off. In fact, we closed it all completely, didn't we, at the 61.8? Because at the time, that's where the top of the Bollinger Band was as well. So we got out here. It's continued to move higher to the 200 period. Now it's found resistance. We are now 10 minutes into the open, and with the initial rally pre-market and the first 5 minutes of the market is cooled at the 5 minute 200 period. Not unusual. So there we are. We're coming back down now, but we're still that's closed out altogether. If we look at our trending strategy, our strategies, we'll look at the others as well in a minute. But the EMA we were doing, so that's where the stop loss should be. It's actually a down one, so I'm going to pull it a bit even tighter, halfway between the 5 and the 9, because this is the volatility of the open. But this might be the first. This is what we'd like to see, a decent, not decent, but certainly a bit of a reversal after 7 consecutive candles to the upside. Nothing goes in a straight line forever. And remember, as I said, we are still, if we got the hourly again, we are still very much or had been very much in a downtrend, and this is still yet to trigger. So we may be getting the 5 and the 9 here on the hourly time frame. Remember, we had a massive downtrend on Friday, massive downtrend so far today. The low 23,635, we said, didn't we? And the hourly trade has yet to go long. And if I come down the time frames, the 15-minute trader is just triggered long there at just before the open. But it tried it first time there at 6:30 and then it went lower. So this might be the second time, might be successful this time, but the 15-minute trader is long and up. The 30-minute trader, we'll have to see for the completion of the 8:30 candle. This is the 8 o'clock candle. So this might be triggering a long position here, but as you can see in this time frame, failed here, failed up here as well to the down. So that trend is still very much in. Have we got all the sellers out of the market here at the start of trading this week? Difficult to call. Obviously, it's a big week. We've got the retailers reporting, the big US retailers, Walmart, Home Depot, as the Americans love to call it, Depot. And obviously the biggest of them all, Nvidia. Nvidia reports on Wednesday, along with the Fed minutes, as we saw earlier. So 30-minute just about to trigger not just about, we've got 18 minutes to wait there. Did the 15 minutes already gone? 5 minutes we've already gone and we're out, aren't we? There we are. There's that stall up the top, but I'm pulling the stop loss up. So there's the first down. It's be interesting if this finishes a couple of green ones or a couple of red ones, but we've certainly been in the money on that one. The more mechanical system, as I said, we got 2 times our ATR anyway. We got earlier there three times is 90 points. So 90 from would have taken us to again, the multiple ATR trader will be out as well there, because that's 23 plus 90 is 810, and we certainly got to 830. So they're three times ATR. So it's been a nice start for our mean reverting strategies. We were short here, got a little winner as it reversed, but this one's quite a big winner, so I'm manually turning it up. Let's have a look at our other trending strategies. Our MACD and SAR, parabolic SAR. So that was short. That went. Hang on a minute. That was our short closed here, wasn't it? We said, and then the cross of the parabolic SAR has already flipped. The cross of the MACD has happened here at 755 again. So that's gone long there, and that again is still long. Stop loss down there. Stop loss here now. Obviously, catastrophic stop loss all the way down there at the parabolic SAR. We're not going to have that here trading the open. So my stop loss on this one would be around the top, the previous pre-market top which we'd identified earlier. Remember the trend line we put on our moving average strategy. So 23,778. So we may be giving up a bit more here on the parabolic SAR. But the rules of this one is, you stay with it until there's either a touch of the MACD and the signal line here, the purple and the blue line here, or we get a flip of the parabolic SAR. But yeah, again, manually the stop loss will be here now, trapping in a little bit of profit because it didn't trigger until this point here, that one. So you pay money to take your choice. That's the MACD and SAR system. They all win, and they win enough. A pivot point strategy for today. This is our blue line is the 50 exponential moving average. So that's gone higher. We've gone into S1. It was short. We've then ran into touched S2. We've closed higher, then broken through. So that would have gone long there at 755. First target with this strategy is the pivot point. Stop loss down here again. Stop loss now would be at the 50 EMA. So a little bit in the money. In fact, that stop loss is still out. That's the that's the pivot point strategy. Remember, it's a touch and reversal, or it's a touch and a breakthrough. So it's been messing around with that kit. You can see here, it's S level. Nothing's happening. We just do. So that's long, and it's not happened. Gone short, long. That's a clean touch. Higher again. That's what you do. So that's the first touch here at 745. Just reiterating how we trade with the pivot point. So we're looking for a reversal from it, like we'd had here, or a breakthrough. So the first one is a touch. The second candle is higher than the close of the previous candle. It's not as high as the wick, so that'd be a bit questionable. But the breakthrough candle came here. It went through the pivot level, which happened to be S1. Doesn't matter which one it is, but this is we only use the 7 levels, the pivot area and the R1, 2, and 3, and the S1, 2, and 3. But we broke it significantly, then went higher. So we're looking for this to perhaps get to the pivot area, which it's back. That is the back to Friday's sort of European Open, London, US Open, really. So it's a bit of a stretch perhaps for the DAX, but that's still long. Stop loss will be at the 50 period. In fact, it would be there now, like it was with the others. The pre-market high here on the pivot point strategy. Next one. Which one have we done? We've done that one. Our triple exponential moving average will be long and just sitting there. There we are. That's gone. We don't use the MACD on here. It's just these two. So that's first suggestion was 740 here. Interestingly, with our TEMA. So this one's actually got in earlier as a long and a stronger long since the candle. So the candles there could have added here on the cross of the two. So it might have. So it's got in there. It would have added there. And again, the stop loss is there. So that's very much in the money. So this is how this one works. You can get a first trigger there when it's above both the moving averages, the blue line and the purple line. So that's first entry. We then get across here of the triple exponential moving averages, the blue line here. It happens to have the MACD on here, so it's a double whammy. What's the same thing? So that you'd have got one entry there, and then it re-enters there on the. In fact, we're above both of our moving, and we're trending now. So this is quite an aggressive entry. The stop loss again would have been down here to start off with, but now it's back where we just said with the others above the previous pre-market high. It's also above the trailing moving average adaptive, the MA or the MAA, depends on which set we have. But you can see here the MACD is still nice and positive as well. So that's positive, and the stop loss, as I say, up there now and locking in this gains and see if we can continue to move up. So the trending strategies are very much in the money and still running. And finally, we done them all. No, the VWAP was the other one with the move with the Heikin Ashi candles. So this was short. This would have been a very, there we go, at 7:40. This is 5 hours out of tilt. So this would have been an entry here, and it's just long still. I mean, it's the beauty of the Heikin Ashi candles, even down at these short time frames. It's nice and clean. But remember, the downside of the Heikin Ashi candles is there. You can see the spread in the on the DAX here on the 5 minute time frames. It's wider, it's cleaner because it's clearer because we're using the Heikin Ashi formula to create the candles, and therefore it's his averaging formula. But it's nice and clean, isn't it? There's no, there we go. There's no hesitation here. So this strategy would have gone long here, which would have been the top. It would have got in. What's that? Let me just move that. So that on the completion of that candle, you'd have got in at the top of the wick here. You can see here, that's the buy point there, the top of the wick. So that would have got the Heikin Ashi system. And I run all these systems, guys, automatically. So if you different systems, different performance. So that would have been the entry here with this system on the 5 minute time frame. Stop loss would have been sort of down here initially. Bottom of the low of the day, this 23,635, and it's trailed up. But this is a strong Heikin Ashi candle move, especially these two here at 8 o'clock and the 8:05 candle. Remember this is New York time, so it's 3:20 in the morning in New York now. But remember, we've got no wick to the south. That's a really strong trending strategy as far as Heikin Ashi candles are concerned. See how it's cooled out. See the other strategies, we've already had red candles, so that they give you advance warning of a cool down. But if you're trading the Heikin Ashi candles, you're just more interested in the change of the colors and the size of the body of the candle. So for trending, it's fantastic. You get some strong, long-running trends. So this has got in here at 23,707. Stop loss, as I say, was initially down, would have been down here at the turn of the market. Always safest point, but we've moved up, certainly above our entry, and my stop loss would now be here. In fact, it might be, again, like we saw with the other strategies around that pre-market high. Remember these highs, price is still the same, so 23,779, call it 78 to the upside. So again, I'm guaranteeing 70 points there with our Heikin Ashi strategy as well. So the trend was down. The trend is now moving higher, and our strategies are in the money. The one we did live, obviously we closed out because we were doing it manually on the variance of the open because we've been caught out the other days. But it's good to have a winner again. And what's happening here? Well, there we are. We still haven't turned short here on our mean revert, and we are overbought. So this is suggesting, look, once, twice, 3, 4, 5. So for 20 minutes, we can't get over that 200 period, but we haven't had a cross on the stochastic. So don't jump in too early. We could suddenly move high. There's no particular news is there, unless something is said by some politician in somewhere and it's moving this, or there's another missile strike, or there's some sort of news coming out of either Pakistan or Washington or Tehran this morning, but that's waiting to go short. But be patient. That's still far from turning down, far from crossing, and the trend remains to the upside. If we go back to our, pick one. Somebody tell me one. There's nobody here to talk to me. Our moving average, our 5, 9, and 3. That's still long, my friends, isn't it? So that can be pulled up certainly to at least there now, and that's still in the money. And all the trending strategies are in the money. So we're leaving that positively. We might see a bit of a cooling of the oil market, which has helped the indices this morning. There we are. So oil is, let's go back to our one with all the lines on, which is our Bollinger strategy. So oil still over 106 for WTI. Got to the, so that's cooled a wee bit, the panic. Let's come off the top. So our top this morning was at 2 o'clock at 108 for WTI. It's been down, not significantly, but it's been down during the Asian session here into the European Open. And you can see the cooling there. Brent, the more important world benchmark for oil, 113.60 was our high this morning. Our derivative market here, 113.60, 113.60, and a short trade would have been triggered there at 4 o'clock or at 5 o'clock this morning as that candle has closed, and target one looms there at 111.85. So have a strategy, trade your strategy, accept your losers, bag your winners, repeat. It's all about consistency, guys. It's all about having an edge that works for you and not getting panicked out or getting rushed into taking a trade. Follow your strategy, follow the rules, keep it simple, don't overcomplicate it. Always watch your risk, and anybody can do this trading lark. And I love the mental agility of it. It keeps me thinking young, if not keeps me young. It didn't stop my hair falling out. So anyway, I've been here an hour. Nobody's talked to me this morning. It's European Open. I'm going to go and get some breakfast and finish my coffee, which has now got very cold. So have a great Monday, everyone. I'll see you tomorrow. What are we doing tomorrow? Oh, it's the Canadian inflation tomorrow, isn't it? Yeah, I'm off to the theatre tomorrow night. I've got a busy day ahead, actually. Got lots going on today. Canadian data tomorrow. We'll see you for that. So, in summary, we've got energy and the yields market still dry. Oh, we haven't talked about. Too fair. I haven't talked about crypto or met gold yet. So let's have a look. Friday was a big down day for Bitcoin. It was looking okay, wasn't it? Earlier on Friday. Here, this is the hourly chart. This was Sunday's open to the downside. So back on Friday, the US Open was doing okay. The US Open here took us under 80,000, and we've continued to move lower since. Let me take the volume off because it's getting in my way. There we are. And it's continued to move low. So here, the low of the day today is taking us to 76,500. So $1,500 just above that key 75,000 level. So Bitcoin suffering from its high on was it Thursday or Friday? Yeah, Thursday we went to 82,000, didn't we? 82,000. Earlier in the week we'd gone to 82,500, didn't we? That was Wednesday. 82,500 was the high of the last week. Today, Thursday's highs was also 82,000. So we got a bit of a triple top there, around over 82,000 last week, and then big decline there on Friday on the US Open, and then weakened over the weekend as well. So our high of the day, 78,300. Low of the day today. There we are. Let's pull that in. All the way down here at 76,500. So Bitcoin pressured to the downside. Gold. Not been here. Gold 4,550. So from that 4,700 pivot, a bit like Bitcoin. And let's pull that down a bit. Last week, pivoting around the 4,700 during Monday through Thursday. The disappointment really of and of the inflation numbers being really hot. The disappointment really as well of the trade deals with China and gold continued to decline. So we went under the 200 hour moving average late on Thursday, declined significantly on Friday into the 4,500 level. And this morning, we've actually been under 4,500. That's the market. That's the news for the gold from the gold market that we went under 4,500 this morning before we found some buyers. So key support of 4,500 today, and we're only $45 above that at the moment, and it's a trending down market again, turning around a little bit here, like we saw on the stock markets on the shorter time frame. But 4,500 is our support for gold, significantly below where we were last week. We just got to take this back up to the daily time frame on gold. So we were doing, as I say, we were doing all right earlier in the week, but we were down for the week overall. Big volatility on Tuesday, down Wednesday, down Friday, Thursday. The big sell off on Friday took us below this opening rally at the beginning of May there, and with new lows for. Sorry, let's do that. New lows for the month have been tested again in the 4,500 zone, and we've just pushed in, as I just said, new lows for the month today, and we still got a week or so to go before the end of the month. So 4,500, the 200-day sits above the low for the year. There, which is where we opened the year, 4,320, and the 200-day moving average, key support area 4,352. So three big levels to the downside for gold if it breaches the 4,500 level. We hold the 4,500 level, need to get back over the 4,700 level, which takes us back over the 20-day moving average. But that's a rounding top move. That's a weak move. The down candle on Friday closed below the up candle we'd seen on the 6th of May. It's smaller, interestingly, body of the candle, but it's closed below that level. So key where we finish today. Technically, there'll be automated buys at 4,500, the zone here, but flat line bottom of the Bollinger Band there becomes a key support area. And as you can see here, we go back into March. That key level was a bit low at 4,400. So 3-4 key levels to the downside for the gold market this week. So watch that going forward. But the trend remains down. We have been in the under half of the 20 since Thursday on that significant down day we'd had on a relatively significant down day on Thursday, but a bigger day on Friday. Remember, Tuesdays and Fridays, it's just anecdotal from my research, but they can be quite significant moves. And we returned to trend really on Friday, didn't we? Where the stock markets, everyone's banked their profits and sold off. Big sell off on Friday across the board, and that's continued in Asia. And it's you're down overall in Europe, I think today, but we're up in the last 5 minutes or so. So let's see what comes of it all. Yeah. So I'm just looking at. Europe, the stock 600 is down here in Europe. So let me just finish with the DAX, which is where we started the day. My short-term trade, so 23,800. Let's go back to where are we? Are we still short as it closed out? No, we've gone longer again. So there we are. The 200 finally broke whilst I was speaking there. This has crossed here, and it's not a clean cross. So the trending market is still playing out quite nicely. So we caught that trend, didn't we, my friends? Well done, us. We just go back to there we go, market high, and we're at the next fib level, the 70. I don't really use the 76 level, but it's legitimate enough. Oh, we're over the 78.6 and we're at the high of the day now. So we have gobbled all that back up. So the trending strategies are doing quite nicely. Thank you. Finishing with the EMA. Let's finish with a bit of positive news. There we are. So that's open. Stop loss is here now. The five. Remember, these are the 20, the 9, and the 5 moving averages. In fact, I'd get that nice. There we are. So we've had a 10-minute decline, up again, another decline, up again. I'd like to see a nice decline, but that is trending higher, my friends, as we move into the first 30 minutes, or we conclude the first 30 minutes of the trading week and the trading session here on Monday, and we've had a successful start to the week. So well done, us. All right, I will see you tomorrow for the Canadian inflation data. Until then, have a great Monday. Be safe, be kind, and may the pips and points and dollars, more importantly, be with you, my friends. All right, take care.